Jay Combs here with our home of eXp Realty, and I wanted to talk to you today about the current real estate market, what it's looked like, the trends, what's happened in the last year, and where we think that the market's going to go. Now, I will quick disclaimer say that I'm no future teller. I don't have the crystal ball, and if I did, I wouldn't be selling real estate. So, but I want to talk to you a little bit about it and what that looks like. So, here in Knoxville, the market has actually the inventory has went up quite a bit, and so if you've been looking for homes for a while, you've probably noticed that there's more price reductions now than there has been in a while. But I want to discuss the overall inventory scenario, what the markets look like in the last year in comparison to other years. So, literally within in the last year, the average home value in Knoxville has went up 25%. And our average price here in Knoxville is $274,440. Right. So earlier this year, as far as inventory goes, the average number of homes on the market just sat right around 1,200. We're almost double that in Q4 of 2021. And so what does that mean for you, the buyer? What it means is there's going to be less multiple offer scenarios. There's going to be more opportunity. There's more inventory that's hitting the market every week, which means that, going above asking price every single time is something that you're not having to deal with. In fact, you're starting to see price reductions, properties sit in the market a little bit longer. The average day on market is still less than 30 days in Knoxville. However, it was to the tune of literally days. The average price per square foot in Knoxville is now above $140,000 per square, $140,000 per square foot. $140 per square foot, where a couple years ago you're sitting at 120 square foot. But with that, the cost of material has gone up. The cost just for everything right now, fuel is up. So it's all relative to one another. One thing to consider right now is we still are in really low interest rate scenario. So the fact that the prices of homes have gone up is not a huge difference per se when you're dealing with a mortgage. And so one thing that a lot of people have talked about is there going to be a bubble? Is there going to be a market crash? And I want to correct the stigma on that. So what happened in 2008 when we had the largest financial crash since the Great Depression was that the average homeowner in America was sitting on an adjustable rate mortgage. An adjustable rate mortgage is a mortgage that is fixed for a certain time and then it's subject to increase or decrease. Well, when everyone's defaulting on mortgages, the interest rates are going up, not down. And so what happened is an average homeowner, if they're living off a certain amount of income and now their interest rate goes up significantly, now their mortgage payment goes up significantly, then they're subject to potentially not having the funds to do it. And paired up with that, millions and millions of people lost their jobs. And so I don't think for a second that we're going to be in the same situation. I think that we're going to be in a correction, if anything. And what I mean by a correction is I think instead of the value going up 27%, I see that coming down a little bit and correcting itself to where it should be. The good thing about our economy now is the economy's strong, and all of the mortgages that have been given out for the vast majority, government-backed loans and Fannie and Freddie loans are 30-year fixed financing with significant more qualifications to obtain a mortgage. A lot of the mortgage companies are requiring more down payment money, which ultimately puts you in a better debt-to-income ratio and a better LTV, loan to value of the property. So if the property is $1 million, you put $200,000, that's 80% loan, you have $200,000 in equity there. And so if that property value goes down, let's say it goes to $900,000, you're still sitting at $100,000 worth of equity. And so what happened back in the day is they were loaning 100%, sometimes even over 100% of the value. So let's say you have $1 million house, you get a loan on it for $1 million, and the property now is worth $900,000. Well, now you're negative $100,000, and you still probably have to pay a real estate agent, and that's why a lot of people went belly up on those. So I don't think that we're going to be in that situation. I think that there's going to be a correction at best. Inventory is going up, which is stabilizing the market. Interest rates are going to go up next year, which is going to mean that homes are going to sit on the market a little bit longer. More people are going to feel comfortable putting their homes on the market. And so I really think that next year we'll have a scenario of where there's going to be more inventory and more stability. So don't freak out, guys. There's never a bad time to buy a house. There's only bad times to sell a house. So, as long as you can wait, as long as you can go out and stay in that, eventually that market will go back up again. And if not, our entire world is in a bad situation. So let's hope that never happens. Hope that helps you guys, and stay tuned for more information. You can call us. You can call us at 865-500-HOME. That's home is 4663, or you can email us. Or you can email us at info@oh865.com. Thank you, and stay tuned to the next video.